But even though interest rates are up, it's not the only issue. A lot of people are really hyper-focused on that, right? It is one thing to say interest rates are up, but interest rates are up because inflation is high. And it's the government trying to fight inflation. They're really the root causes of inflation, but inflation isn't just driving interest rates. It means your rents are going up, potentially, which is great. But unfortunately, rents are staying flat in most areas, right? Meanwhile, it's driving your maintenance costs. It's driving your renovation costs. Not only is it more expensive to renovate the materials, it's taking longer to get them. And the great resignation coming out of COVID affected labor, the ability to hire. So it's driving payroll costs. Inflation is also arguably hitting other aspects. We have insurance premiums. Natural, whether you're a believer in global warming or not, this isn't a political discussion. There has just been more natural disasters in a lot of the favorable markets. In fact, I've had 2 500-year floods in one property within just a handful of years. A lot of carriers are just picking up and leaving. So you've got interest rates, you've got payroll, you've got material costs going up, affecting your CapEx ability to renovate. Now insurance premiums, which we would usually put like a 5% escalator, now they're up 30%, 30% nationally this year, 30%. That's one of your, other than tax, that's your biggest one. And taxes are going up. A lot of states are hurting with COVID. They're looking for where they can rebalance out their balance sheets and taxes in a lot of the favorable markets, including some places like in Texas. And if you didn't buy a cap rate, of course, your interest rates is going to grow to meet that cap. So those are all major, what we call financial disasters, right? And coming out of COVID, rental assistance ended, rent payments didn't resume in a lot of markets, and delinquency skyrocketed, which caused the eviction courts to be backed up. And for example, where we used to be able to evict in 2 months, 1 to 2 months in Atlanta, it's 12,000 evictions that are backlogged. It's 15 months, 15 to 16 months for the whole process to get somebody out. Let me just put a little analogy behind it. Say you own a store, all right? And for 16 months, people come in every day, fill up their basket, and walk out. And for 16 months, you've been going to the court and you've been telling them, or sorry, for it takes 10 months, you're going to the court and you're telling them, people are stealing from me every single day. There's a whole building of people stealing from me every single day. And then finally, after 10 months, the court creates a date for you, saying that they will see your case in 10 months. And then after 10 months, they say, yep, you know what? All those people are doing something illegal. You're right. We're going to notify the sheriff's company to stop them immediately. 6 months later, 5 to 6 months later, the sheriffs show up and they tell those people to stop stealing from you every day. And that's essentially what's happening in Atlanta right now. And there's 12,000 evictions. So there's more than just interest rates. And so there's a lot of distress in the market. And so investing in downturns right now, it's harder if you weren't hedged in a combination along the vertical of the capital stack in real estate. If you weren't in the more recession resilient markets with diversified employment, and you weren't in places that were landlord friendly that allow you to evict, like all these things are going to hit you. So that's why we talk about diversification. Timelines is a part of it. Unfortunately, the material supply issues and backlog. And then the loans are coming due during this time. There's actually $1.5 trillion in commercial bridge loans coming due by 2025. Everybody should go crawl in a hole and hide and be fearful.